another big story, maybe not getting much attention, is the huge jump in corporate borrowing. We are now tracking $230 billion in debt deals just this month. And maybe here's an RBI for you. That would be the heaviest volume of any month ever. The question is how this might be impacting the government bond market. Is there simply more competition for debt sales and that money? I don't know, but Rick Santelli probably does. He joins us down from Chicago with the Bond Report. Rick.
Well, you know, there's two sides to this story. The issuer side, where they're issuing all this record paper for the month of September on the investment-grade corporate side. But in my opinion, the real story are the buyers of these securities. The buyers of these securities have witnessed the notion that the Fed is going to embark on an easing strategy. They've already eased a quarter basis point, 25 basis points on the 17th. To many investors, when the Fed is in easing mode, that means rates are going down. Now, many investors ignore the market side of that, but we'll hold that for a different discussion. So there's a huge competition to buy before yields fall. And that really is somewhat what's going on here. And if you look at this chart of Barclays investment grade, what you'll see is a yield of around, 490-ish? And the reason that's important is you take that yield and you subtract the current 10-year, which is around 414. And what you end up with is 75, 76 basis points. That means to take the risk of buying a security issued by a company versus the risk-free nature of the U.S. Treasury, you're getting basically 0.75% add-on. And by historic standards, that add-on is the smallest since 1998. So what that's screaming is that many investors are looking around, looking at the frothiness in equities, at least that's their determination, and saying before yields fall, I'm going to jump into this, a little less than 5% isn't bad. But whether it is or it isn't bad, there's a big credit risk there, and that might be a bit underappreciated. And in my opinion, that's at the heart of this story.